Hi everyone, welcome to the Mighty Trades channel. My name is Johar. Welcome to another episode of Weekend Technical Analysis. So last week we concluded our episode with Vijaya Diagnostic Center. So let's not waste any more time and move on to RHI Magnesita. Okay. So we're looking at the weekly chart. We are looking at the last 5 years trend right here. And as you can clearly see, this chart has been in an absolute upward momentum since the fall after COVID, and it's currently trading at all-time highs. So purely a momentum play here, no technical pattern that I can see as such. But if you are holding this stock, then you should continue definitely holding it. I wouldn't recommend buying at these levels. And your stop loss in this case should be definitely this low of 522. If this low is broken, then please get out and book your profits if you have bought it somewhere here. But definitely a very strong momentum play. Something is going on in the stock. Volume buildup is also amazing. Yeah, during the pullback, there was no massive selling volume. So definitely a stock worth holding on to if you already have it in your portfolio. Moving on to POLYPLEX Corporation. Here is another example of a very good strong stock. Has been on an up run since the fall and COVID. Brilliant move in the month of February and March, as we can see, and now it's corrected very similar to how the with the rest of the market. Now the two support zones, or sorry, one large support zone that I can see on this chart is this entire zone from here till here. All right, so this entire range should act as a support zone. Let me bring this down. What's this here? Okay, so this entire range from 22233 to 2154, so it's close to a 80-90 point range that should act as a support. If it bounces back up from here, which it looks like it might, it will continue up with its momentum. So this would be a good area to add some more. But let's look at the fundamentals a bit to understand if the stock has, what does this company do, because I'm not sure what it does at this point. So it's definitely not overvalued to its industry peers from what we can see here. It's just slightly above the industry PE, so that's a good sign. As per this website screener, it's not too away from its intrinsic value also. That's also a good sign. ROCE is also good. And what does this company do? They are engaged in the manufacturing of flexible packaging and industrial usage. Okay, so that's a good sign. It's in the packaging business. Let's look at the quarterly results. Quarterly results, as we can see, very good results since 2020 onwards. Extremely good results. If we look at the yearly numbers, then these are also on an upward rise. Trailing 12 months revenue is 6,000 crores. Profit is also at 508 crores. So definitely a growing company, very fast growing company. And if you look at the shareholding pattern, then some really good interest being shown here as well. Promoter holding is stable. FIIs are increasing their holding, even though they are selling massively in the market. They seem to be accumulating stocks here. Domestic institutions are stable between 5 and 4.5, and public shareholding is going down, which is again a good sign. And even in the public shareholding, I see we have Dolly Khanna, who is holding, and in fact she has increased her stake here. So definitely looks like there can be something good going on in POLYPLEX Corporation. So let's try and putting Fibonacci retracement here. So from this correction all the way till this correction, if you add Fibonacci, then the next target comes to be about 3000, level of 3000 points. So let's see here. So this would be our target. Now let's go back to the candlestick charts. Okay, so if you were to add this position today at this current price, where it is at currently right now, right here, Then the target is coming to about 28%, and if you were to take the bottom of this range as our stop loss, then the loss is 9%. Definitely this looks like a very good trade to me. The price has corrected also by quite a bit, so you're not taking too much risk here, and we have some good big investors on board. It's in the packaging industry, company is growing, FIIs are increasing holding, so it doesn't look like it might move down much from here, and volume buildup is also excellent as we can see over the years. So I'm adding this to my watch list, POLYPLEX Corporation. Let me just copy paste it from here. Okay. The month is May. The date that I'm recording this is on 22nd. The price as of today is 2370.30. Now, what are the things that we identified here, right? First is growing. Let's just check the margins also once real quick. Quarter on quarter margins. Okay. All right. So margins haven't taken too much beating. Let's see, maybe in the March results, the margins might go down a little bit because of the increasing inflation that's going on. But otherwise, generally the margin has been in this same range for the longest time. So let's add this to the watch list. So growing revenue and profit quarter on quarter and YOY, FIIs increasing holding, big name investor Dolly Khanna also increasing holding, price has corrected to good levels to accumulate, can continue the momentum going forward. All right, so what's going to be our target entry price? We are going to keep it pretty much the same where it's currently right now, so 2370.30, 2370.30, or let's wait a minute. So this candle is looking a little weak, so maybe we can bring the target entry price down a little bit. Let's switch over to a daily chart to see what sort of price action we had. Yeah, so on the daily chart also we can see that the next three candles are pretty much negative. Even though this candle is green, it's actually 0.14% down. This candle saw a little bit of a pullback, so maybe we can get it at a little lower price, in my opinion, somewhere around here, and we can have a better risk to reward ratio than in that case. So if I switch back, then we can keep maybe 2318 rupees as our target entry price, the bottom of this green candle. So that will bring down our loss also to just like 7%. So let's take a little bit of the risk off the table, you know. So the target entry price then comes to 2311. So let's keep it as 2311.00. What's going to be our target? Our target is going to be 3039. So our potential gain is 31%. Our stop loss is going to be at the bottom of this level, which is 2158 on a weekly closing basis. So our loss is about 6%, 6.5%. We are currently waiting for entry, and this is the current market price. Great. So this looks like a good find, POLYPLEX. Okay. Moving on to TATVA Chintan Pharma. New listing just got listed in July last year. So not really much to talk about, but looks like a head and shoulder pattern to me that's in the making. But there hasn't really been any trend in the stock, as we can see. I mean, there has to be a good uptrend for a head and shoulder pattern to form to confirm a downtrend. But since the stock has just recently listed, I don't really see any uptrend as such. It just went up, made a double top pattern here, broke the low of the double top pattern, and then we saw a correction. And now it looks like sort of a head and shoulder pattern, but I wouldn't really be too sure about this. But anyways, we should avoid this chart because there is no trend clearly established right now. Let it give a breakout above its previous high of 3000, and then we can probably take some call on this. Moving on to THYROCARE Technologies, has corrected deeply, extremely deeply, and it's come back down to its pre-COVID levels, pre-COVID highs. No real momentum here, better to stay away from this kind of stock. Looking at EASEMYTRIP. Sorry, just hold on a minute, please. Okay. Looking at EASEMYTRIP planners, definitely in strong momentum. But I'm not really sure why this company's price is going up. I mean, there's nothing really unique about the business model as such. Let's go take a quick look at the fundamentals of the stock. Even if you look at the fundamentals, it's overvalued compared to its industry peers. I don't know what industry peers they are comparing to. And if you look at the sales also, sales sort of look okay, nothing real great. Profit and loss statement also, I mean, it looked like they were doing better before in terms of revenue, but I think now the company is focusing more on profitability. As we can see, their margins have significantly improved compared to what it was over here. Probably this was the growth phase that the company was going after. Now it's going after a profitable phase. If we look at the shareholding pattern, then we can see FIs are holding their position steady. In fact, they have increased it by 1% in the last quarter. Domestic institutions are reducing the position. In the public holding, there doesn't seem to be any large investor currently. I would like to avoid the stock, plus it's already at its very all-time high level. If you can get it in a consolidation phase like this, then you can probably buy it for momentum. But right now, I would like to avoid this kind of stock. GODFRYPHLP. Let's look at a little longer time frame. Let's look at the monthly chart. And if we look at the monthly chart, then we can clearly see that it's been sort of consolidating in this range since a very, very long time, right? Since 2015, it's been consolidating. I mean, this high was made in November 2015, and since then it's just been consolidating in this particular range. So no real reason to be interested in this stock right now. The pattern is completely random. I can't really see any line to draw. But if it breaks out beyond this range, and even if let's take the VIX also, if it gives a nice strong closing, if you look at the last 5 years chart, if it gives a nice strong weekly closing above this range, then we could potentially see some new trend coming into the stock. But until and unless that happens, we have to avoid this. Looking at GOCOLORS, this also looks like a new listing. No real reason to take a bet on this stock. I don't really know much about this company, plus it's a new listing. Better to avoid these kind of stocks right now. Looking at TCI, which stands for Transport Corporation of India. Okay, so first time I'm looking and hearing about this company. Chart looks fantastic. Really good consolidation, massive up move in one particular week, then again consolidation, then again a supreme up move for the next couple of weeks, and then it had a deep correction with the market fall. Looks like it's trying to come back up again. Let's look at the financials. Then we will see if we should further analyze the stock or not. Okay. So Transport Corporation of India is engaged in the business of freight, transport, supply chain solutions, and transport through seaways. Okay. Let's look at a little bit more. So multi-modal logistics provider present across multiple segments of the logistics industry, including transportation, warehousing, supply chain management. Okay. Freight division accounts for 46%. Assets, it has 6 cargo ships with a total capacity of close to 80,000 tonnage. Okay, 9,900 containers, of which 7,000 are self-owned. That's a good thing. Supply chain solutions offers 37% of the revenue, and sea freight offers 14.9% of the revenue. All right. So overall, looks like it's a pretty massive organization for sure. Now let's look at the results of the company. So if you look at the sales, they seem to be pretty stagnant all the way till September 2020. But from December 2020 onwards, we can see that for the last, out of the last 5 quarters, 4 quarters have posted revenue of about 800 crores, which is definitely a good thing. It's a good sign, right? Because we can't see that before September 2020. So maybe in March also we might see revenue of 800 crores or more. Operating profit margin is at its highest ever right now. If you look at the net profit, that also looks like it's at the highest ever as of December 2021 results. If you look at the profit and loss statement, then the revenue of the last 12 months is highest ever. The profit of the last 12 months is highest ever. The margin of the last 12 months is highest ever. And if we look at the shareholding pattern, then let's see what's up here. Okay. So foreign institutions have pretty much kept their holdings steady at 2.5, 2.6%. Domestic institutions have also kept their holdings steady. Public holding is going down, which is always a good thing. And if we look at the public shareholders, there don't seem to be any big names that I recognize at least. So the company is posting highest ever profits, highest ever revenue, highest ever operating profit margin, and the share price is also very close to its highest ever zone. So I think the fundamentals, I think the stock price has caught up with the fundamentals of the company. It can continue going up from here, but I don't see much room for a further up move. It can maybe go up by another 15, 20, 50% also. Who knows? If you look at the PE, then it's definitely undervalued compared to its industry peers. So there is a chance that you can see this stock further go up. But I would suggest you wait till it gives a breakout from this previous resistance. Because it is very possible it can go take a pause over here and make a double top pattern, which obviously no one wants that. No one wants a double top pattern. But if it does make a double top pattern, then it will make a proper M pattern here. And if this low is broken, then you will see further downside. So let this get taken out first, and then you can enter into this trade for a momentum trade. But until then, you should continue to avoid the stock. Looking at KRBL Limited. Okay. If I'm not wrong, KRBL, I think, manufactures rice. It is currently trading at its extreme bottom levels. I don't really see any reason why we should enter into a stock which is trading, which has not moved or participated in the entire bull run that happened over the last 2 years, right? I mean, in the last 2 years, the stock has done nothing. It's given zero returns to its investors. And if you look at the fundamentals also, it's heavily undervalued for sure. Its debt to equity is low. Its book value is okay. ROC is also okay at 20%. If we look at the sales numbers have pretty much stagnated as per the December results. Net profit has gone down. Operating profit margin came down really badly in the last quarter. Not sure why. If you look at the profit and loss statement, again, from the last 3 years, it's been pretty much in the same ballpark range. Net profit has gone down, which is clearly showing that there is some margin pressure that's happening here. And if you look at the shareholding pattern, there doesn't seem to be very heavy institutional interest here. FI holding is sort of the same, very limited change here. DII has also very limited interest over here in this counter. And if you look at the public shareholding, there doesn't seem to be any big name investor that I know of in this public shareholding list. I can see that Reliance has taken a big chunk over here since quite a while, but this is a very old holding, so it doesn't add anything more to the share price. So better to avoid the stock. Any new up move will only get confirmed if we see a breakout above this level of 330. Then we can maybe see some new up move that can come in the stock. Looking at CCL, which is Carnival Corporation, trading at rock bottom levels, no reason to discuss further. If you look at MAZDOCK, then this chart is looking interesting. So we are looking at the weekly chart right now, and what I can clearly spot is a nice upward channel that it seems to be trading in, right? So here is the channel. These are all the bottoms that it's making, and if we connect all the tops here, then we can clearly see that this is a channel that it entered into from June of last year, right? So it got listed on this day, made this channel, went to the top, consolidated here, made another top here, came down, tested this channel, went up, again tested this resistance, came down. So this looks like a upward channel right now that it's currently trading in, and the depth of this channel is from the bottom to the top is a good 39%. So definitely a very good add if you can get it at the bottom of the channel. Now let's look at the daily chart once, right? If you look at the daily chart, the picture seems similar, right? And if we switch back to the weekly chart, so the stock has been correcting for 3 weeks. So there is a very good chance that it might consolidate here for a while, can come down and retest and go back up to the channel. So if you can get this stock at the bottom of the channel, somewhere very close to the channel, say just 15-20 points away also from the channel, if you can grab it, you should grab it. Keep the bottom of the channel as your stop loss. If you get a weekly close below this channel, then exit. If you don't, then continue holding it, and you can sell it at the top of the channel and continue playing this game for as long as you can, or for as long as the stock continues to operate within the channel. So that's the view on MAZDOCK. Right now it's already moved up last week by 12%, so it's very far away from the channel, so the risk to reward is not that great, but definitely add this to your watch list. Next time if you get it at this channel, then you should add it for sure on in your swing trading positions. And again, remember, any close below this channel, a weekly close below this channel, you should close your position and get out of it. Moving on to BARBEQUE Nation, very bad downtrend since November last year. Avoid, nothing further to discuss. Looking at Kalpataru Power, again this is also making lower highs and lower lows. So until and unless a previous high is taken out, such as 414 rupees, there is no reason to be bullish on this stock. Looking at RBA, which is Restaurant Brands Asia. I'm not sure what RBA is. Let's have a look. Okay, so this is Burger King. All right. So Restaurant Brands Asia again has been on a downtrend. No reason to enter into this trade right now. Better to avoid this stock. Yeah, best to avoid this. Looking at Johnson Control Hitachi. Okay, let's look at the monthly chart once. All right, so it's been trading in this. It's been trying to get out of this sort of zone right here, and it's been stuck in this price range since 2017, and doesn't look like anything is really happening in the stock. I would say that you could buy it for the top of this range, but only buy it if it goes above 2274. If it gives a breakout above this, you can probably hold it till the top here and get like a 33-34% gain, and keep the stop loss basis your risk appetite. Right now it's very far away from this resistance line, which is almost 27% away from its current price. So better to avoid the stock right now. It doesn't seem to be going anywhere. You can keep it on your watch list. If it gives a closing above this, then go ahead and buy it. There is also a very good chance that it might bounce from here and test this level once, because this level which it's at right now currently does seem to be a strong support. You can see some really big candles forming whenever it comes to this level. So you could maybe add it here also and keep the bottom at keep the stop loss at 1665, and you can maybe catch a 10-15% move, but I will personally avoid the stock. Looking at Infibeam Avenues, this stock is also trading at its rock bottom levels, so better to stay away. Triveni Engineering, wow, again looks like a nice strong momentum chart that we have here. So we can see after the fall from COVID, it reached a level of 34 rupees and now it's trading at 316 rupees. So close to 1000% gain that we can see that the stock has already given, right? If you look at the all-time high that it made at 3178, then 1000% gain this stock has already given in the last 2 years. Not sure how much more steam this stock would have left now. But if we try and connect all of these bottoms, let's switch over to the line chart. So yeah, if we try and connect all these bottoms on the line chart, you can clearly see that it has a nice strong trend line that it is respecting. It gave a momentary close below this line last week. That's when the entire market was falling. Everything was falling. No technicals were working at that time. But we can see a sharp bounce back that's come back to this line. So if you can get it somewhere close to this support line, you can probably add it to your momentum portfolio and continue holding it and keep this line as the stop loss. Also, if you put super trend here, you can use this line plus the super trend as your trailing stop loss strategy. Because if you would have strictly followed this line, then you would have probably closed your position in this area on this candle, as you should if you're following a rule. But if you add super trend along with this, you can see that they did not break the super trend support, so you could have continued holding this position. So I would always advise that, if try and look at super trend also to see what signal is super trend giving. If both of them, obviously, if the super trend also turned right, then you have to close it no matter what happens next week. But super trend gives you like a good idea of, okay, if my trend line has broken but the super trend is still positive, then there is a good chance that you can see a recovery from the super trend support line over here. So you can keep a combination of super trend and a trend line as your stop loss. And if you can get it close to this support trend line, you can add it and continue riding the momentum. Otherwise, it's better to avoid the stock because it's already run up a lot. Looking at Rallis India Limited. Okay, so here we can see that in Rallis there has been a very deep correction. If we look at the monthly chart here, you can see that this monthly candle has broken this support zone. Definitely, decisively it's broken, but the month has not closed yet, guys. So let's switch back to the weekly chart. Yeah, so if you can see, this was a strong support that was making on the weekly chart. That was decisively broken in the first week of May itself, and since then it's been continuously moving down. So no reason to be bullish on the stock right now. It's very close to its pre-COVID high now. This was the price in December 2019. So it's very close to that again. So better to avoid the stock right now. Don't really see any reason why we should be discussing this further. Looking at JBMA, then JBMA, then maybe we could be seeing a symmetrical triangle forming here, right? And if we look here like this, you can see that the lows are getting lower, sorry, the highs are becoming lower, but the lows are getting higher, right? So there is a very good chance that we can see a symmetrical triangle breakout happening here in a couple of days or weeks, I'm not sure. But if we'll take the depth or the length of this triangle, so from here till here, so that's a depth of 87%, and we put on top of the breakout. So let's say the breakout happens somewhere over here at this price, or maybe let's move it over here. Okay, so let's say in the next 2 weeks, if we get a breakout of this, then we can potentially see this target coming up. So from here, from this point, from this price onwards, your gain is 57%, and the stop loss which you could keep for yourself is somewhere over here maybe. Now the stop loss we can decide as per your risk appetite, or depending on what type of candle breaks out, that can be kept as a stop loss as well. So if you have something like a nice strong bullish candle like this on which the breakout happens, then you can keep the low of that candle as your stop loss. So that needs to be decided. But let's add this to our watch list. Definitely looks like a nice strong pattern that's in formation, but we have to wait for a nice clear strong weekly closing breakout on this chart to enter into this trade. So I'm adding this to our watch list. JBMA, month is May, today's date is 22nd May. The price as of today is 464.65. Symmetrical triangle formation. So what's going to be our target entry price? Target entry price is going to be somewhere above this level. So we can take probably this level as our target entry price. Yeah, which is pretty much the same level that I have marked here. So 556. 556. What is going to be our target? Our target is going to be 871. Now what is going to be our stop loss? For now I'm keeping the stop loss over here, so that's 501 rupees, but this stop loss will need to be updated depending on what kind of breakout we get. But as of now, as a placeholder, I'm keeping 497 as a stop loss, which looks decent. A 10% loss for a 56% gain looks like a decent risk to reward ratio. Alright, so that's the view on JBMA Auto. Looking at ESAB India, brilliant momentum stock, has been on a complete uprise since last year August. So definitely worth holding on to if you already have it. I would not suggest adding it right now. If we can find a consolidation or correction like this to get into the stock, then that would be the recommendation. But for now, I don't think it's good to add this add the stock at this levels, because if you see, the PE is much higher than the industry right now. ROC and stuff is very good. Fundamentally, it's very strong, very low debt as well, but it's already run up a lot. Not sure how much more juice the company would have. I mean, it has to continue giving really stellar results to continue this up move. But as of now, I don't see any reason why we should take the kind of risk at this level. So let it take a pause, let it consolidate, and then you can probably add it. But you should not add it at this current price that it's currently right now. Looking at Green Panel Industries, then this is also on a very strong uptrend for sure. It's corrected also massively. It's corrected by close to 20% in the last 2 weeks. and looks like it's taking a pause. So this definitely looks like an interesting add to a momentum portfolio for sure. And if we look at the trend line here, let's switch over to the line chart. So we can clearly see that there is a nice strong trend line support that it previously had. Right now that trend line has been broken, right, with this candle, and it's staying, and it's still not given a close above it. So if this price goes above 572 rupees, then you can potentially add it into your portfolio and continue riding the momentum. But as of now, the momentum looks like it's paused, so don't enter it right now. There's a very good chance it can continue falling again. If we look over at the daily chart also, we can see that it's trying to move up, but it's sort of staying there, which is a good sign. It's not a bad sign, but it's staying here. But let it go back above this trend line, at least on a weekly closing basis, to enter into this trade. Otherwise, avoid it for now. Looking at FDC is also trading at rock bottom levels. Better to avoid. Heidelberg Cement has also corrected quite a bit, has come back down to rock bottom levels. Good to avoid. Varroc Engineering, as you can see, I've already drawn a line here. We need to wait for a breakout above 446. If and when it does break out above 446, then we will have a nice big target for ourselves. So first, let's look at some fundamentals of Varroc Engineering to decide if we should keep this in our watch list or not. So ROCE is the negative, not a great sign. Debt to equity extremely high, and there is no PE to compare the valuations, nothing. If we look at the fundamentals, then the Varroc Engineering was incorporated in 1988. That's a flagship company of Aurangabad-based Varroc Group. Varroc is a global tier 1 automotive component group. It is engaged in the business of manufacturing and supplying automobile components to a wide range of OEMs across the globe. Okay, let's look at the results. The results seem to be stagnant, consistent revenue, but no real growth that I can see here. If you look at the margins are also all haywire. Sometimes they are negative, sometimes they are positive, sometimes they are in single digits, and it's never, I don't see any double digit margins over here. It's completely loss making since the last since the last 8 quarters. It's just been posting losses. So since the COVID pandemic has started, we can see that it's continuously posting losses. Before that, it looked like that was posting profits at least. If you look at the last trailing 12 months, it's currently in a loss of 1,000 crores. Revenue is also, as I said, stagnated since 2019. Margins is down to a single digit 1%, so not really a good sign. If we look at the shareholding pattern, FI holding is pretty much the same at between 4 to 5%. Domestic institutions are also pretty much the same, between 13 and 15%, and the public shareholding is going down, which is always a good sign. But fundamentally, I don't see any real anything really good in the company. But one interesting thing is that there is something happening in terms of volume over here, and you can see these two large green volume bars, but then we can see this very large red volume bar that came in the first week of May. So this is a little discouraging right here. But if it does break out above this level, then technically the stock will become strong. Fundamentally it will still be weak, but technically it will become strong, and the price range is going to be, I mean, the target above this level will be about 72%, right? So this becomes your target right here. Now, because the stock is not that strong fundamentally, I will avoid this because it's not fundamentally strong. Because I don't know for what reason it's going up. Maybe it might be turning around, maybe it might post a profit, but until and unless I see at least 1 quarter where the company starts posting a profit, I will not enter into the stock, because the market environment is such that even companies which are posting supremely, extremely good profits are getting beaten down, then why do we want to risk our money with a loss-making company? So this is just my technical analysis here. Please do your own research and consult your financial advisor. There's no buying or selling advice at all. If you already have it, then do what you feel is right. It's your profit, it's your loss. You don't have to thank me or feel sorry for or anything. Moving on to Jyoti Labs. Jyoti Labs is also trading at, has not done anything since the last 2 years. It's not participated in the bull rally at all. Let's take a quick look at the fundamentals of the company once to understand if there is any reason uh, of why we can enter into the stock. Maybe it's an undervalued good company, because I think Jyoti Labs manufactures Ujala, that liquid, that whitening liquid, and maybe some other things. Let's take a quick look at the website to understand what all they do are brands. Yeah. Yes, so Jyoti Labs is in the FMCG business, and FMCG business is always good. These are products that we'll continue using no matter what happens. And it has some decent brands, right? Ujala is a brand that I know. There's a lot of ads that came for Ujala. Prill is also a pretty popular brand. Haven't heard of Maxo or Henko much, but Margo is also a good brand. So definitely they have some good brands under their portfolio. So that is a good thing. Now let's take a quick look at their quarterly results. Quarterly results, we can see that the last 3 quarters they have been posting a revenue of 500 crores and above, which is a very good sign. Their margins have gone down a little bit, or quite a bit. That may be because the inflationary pressures are kicking in. Net profit has also gone down because of the reducing margins. But overall, the last 3 quarters, they have been posting really good results compared to what it was before. If we look at the trailing 12 months, then the revenue is highest ever. The net profit is not the highest ever because the margins are at an all-time low right now of 12%. And if we look at the shareholding pattern, then we can see there doesn't seem to be much institutional interest. The FI holding is pretty much the same, between 10 and 12%. Domestic holding is also between 16 and 18%. Public holding is going up. Let's see if there's any big name investor here. So we can see Mere Asset Consumer Fund has bought 1.2% stake over here, which is a good sign. Mere Asset is a very large institution, so this is definitely a good sign for Jyoti Labs. So overall, fundamentally, the company looks okay, nothing great. Margins are a little going down a little bit, but they have good brands. Their revenue is growing. So these margin pressures will take care of themselves later on once this inflationary cycle plays out. And it's available at a good price also. It's not available at a very high price. But technically, the stock will only become strong if it gives a closing above 2 very important levels, right? One, it has to break this trend line that it's been currently in since since July of last year. So number one, it needs to give a breakout above this trend line. Number two, it needs to give a breakout above this level as well, 162. So if it gives a closing above this trend line, don't just enter it too quickly. Let it give a close above 162, and then you can see the actual rally that will start in this stock. So there are multiple resistances on every level on this chart. So let's look at it. So first resistance is here. Second resistance will come in at this level. Let me use the horizontal ray option. Okay. The next resistance comes in at this level. In fact, let's stretch this out till here. Yeah. So this is the major resistance zone that will actually start the bull run. And then after that, you can clearly see that this becomes the next resistance level, and then the next resistance is right here, which is the all-time high level. So first, the breakout has to happen here. Then you can take your entry, and depending on the breakout, we will decide a stop loss. Then the next level is this. If this is taken out, then this becomes the next level, and then this becomes the next level. So the profit all the way up till here is 50%. It will be a long journey. I think if a breakout does happen from here, it will take at least 1 to 1.5 years to complete this entire move. But definitely a very fundamentally a good company, and if these margin pressures get resolved, then this can be a good company to take a bet on. So I am adding this to my watch list, and our target entry price is going to be above 162. 162.65. Okay, fundamentally strong company, going through margin pressure due to inflation. Last 3 quarters I've seen highest ever revenue. FII and DII holding stable. FMCG stock, so it is a considerably safe bet. Okay, so sorry, put this here. So the current price is 145.60. Our target entry price is 162.65. Our target, let's keep the first target as 185, and then we'll have to basically review the position. Let's see here. In fact, you know what, let's keep the target as the all-time high, which is 244. This is what I would aim for, honestly. And the stop loss we will decide when we get the breakout. As of now, we don't know when it's going to break out, or even if it does. So if it doesn't break out in the next 1 year, then we will remove this position from our watch list. So I think that was it, guys. I think we have found some good trades. We have found 3 trades that we can potentially enter at this point. And I think that's a good find. The markets are anyways choppy. We shouldn't be taking too many positions in this kind of market, and we should stick to only fundamentally strong stocks that we have the confidence to hold even if the market corrects, because fundamentally strong stocks will bounce back up faster than weaker stocks. So just be careful of where you enter, and have a good day for the rest of the have a good night. So thank you for watching, and good night.